Hi everyone, it's Tuesday, the 28th of May, 2024, and this is my video blog, which should normally have come out on Monday morning, but I was actually away in Norway, and anyway, the stock market was closed for a bank holiday in the States. So it's a bit of a shortened version as I've just got back, but it's got all the essential information in, so here goes. Last week I said that my stock picking routine was complete. I'm now putting into that almost complete. I haven't actually changed the parameters or the filters involved, but I'm going to change something else to make life a little easier for all concerned. But first, the indices, and an interesting one this week. So the TICN index increased a little bit, 0.09 of a point, but it's still well out there ahead. The index is actually 246, so an increase over the original starting point of 100 of 146. By comparison, the S&P also up a tiny amount last week, but an increase of 105. The Nasdaq had a much better week. It still got somewhere to catch up to TICN. TICN at 146, the Nasdaq at 120, which was 3.05 points up. The Dow, having reached its all-time high the week before, came back again, came down by 4.32 points over the week, so lagging well behind. But again, don't forget that the TICN index doesn't include any of the premiums from option trading or indeed the interest that we get by holding cash in the account. Okay, and here are my 21 stock filters. They haven't changed since last week. They're all exactly the same. Pause the video and have a look through them if you want to check them all out. Stage one, go through the value line long list. That's to get the stocks that have got good scores on timeliness and safety and financial strength, and also that are within the right price range. Gets us down to about 150 stocks. Thereafter, we eliminate stocks where the charts and charts and indicators just don't make them look suitable at present. So that gets us down to probably fewer than 10. The next stage is to look at further 15 factors to highlight the negatives and the positives in there. And for example, if one's got too much debt, it gets thrown out. If one has got a bad balance sheet where its liabilities are too high compared to its assets, it gets thrown out. And we bring it down again. And this is for this week, this is actually where we got to. So in there, you've got 1, 2, 3, 4, 5, 6, 7, 8 stocks. So we're down to 8. What I'm going to change about this, and there are some red, sorry, just probably should point out in there. Not too far away, though, on the assets versus liabilities and the debt versus capitalization. They're the main ones. And they're the ones that also show up on the 4x4 style scoring from TICN. But what I want to change about this is its just general readability. So this is obviously a dummy, but it's where I'm heading. So hopefully by next week, or it might take a little bit more than that. So hopefully by next week, you'll have something which looks like this, and it's just far easier on the eye. But to continue, stage 4, the finale, this is where I actually look at the options charts and find out, and in conjunction with the charts, and find out what stock prices we might want to set as strike prices. I then look at the premiums associated with that, the amount of time. I calculate the return on capital employed, and then I annualize the return on capital employed. And for this week, here are the results. So again, we've got 1, 2, 3, 4, 5, 6, 7, about 8 stocks. The months involved are between sort of August and October. So they are the months that I thought gave the stock enough time to get up to or beyond the strike price. You've got the number of days involved. Obviously, they're going to go down each day. So what the strike is, what the premium is, how much stock buying power the trade would use, and then you can get to return on capital employed. Most of these are quite low, I've got to say. But there's some up there, 36, 38. And then annualize that, and now we're looking a bit better. We've got three that are over 100%. That's BMY, Pink, and PRGO. The last thing I look at is, well, okay, good trade. How much open interest is there? And that varied a lot from 3 up to 3,000 plus. So BMY with 328, perfectly acceptable. I can't see anything particularly wrong with that trade, and it's pretty short term. Uh, the next one we're looking at is, let's have a look. 3 is very low for HURN. It's a very low open interest. We're in danger of almost playing with ourselves. However, it is September, and by then there's a fair chance that the open interest will have increased, and we want it to be up above 300. So it may well get there. It might be one to hold back until things develop a little bit. Pink is already developing somewhat, but at 31 it's still pretty low, and Prego the same. So the importance of this open interest is if you want to close the trade early, you've got to your sort of 89% or whatever, then you've got to get a decent price from the brokers. And if there's only you involved, they will play hardboard. It'll be expensive to get out. Much better if they're able to trade. They've got somebody to actually pass the trade on to, and that's going to be more the case if there is some open interest. Okay, so they're the stocks I'm going to be playing with over the next week or two. And so next week, we'll look further at share price history compared to the S&P 500 for individual stocks. And we'll also be looking at that dashboard that I'm trying to create. In the meantime, don't forget about the live training. We've got that at towards the end of June, Friday the 21st, Saturday the 22nd, Sunday the 23rd. Friday, it's just the evening. A really good introduction for anyone that hasn't come to our training events previously and anyone that's new. You should bring friends, colleagues, family along to that if you think that it might be good for them to get involved. And on the Saturday, we'll be looking at the scoring systems. And then Sunday, we'll be looking at options and also looking at some of the research and some of the stuff that I get involved with. Of course, we will have Owen O'Malley. He'll be on stage as the main presenter. I will be playing second fiddle. Unfortunately, we won't have Anna with us on this occasion. And just a gentle reminder about the book. It's still going well. If you haven't looked at it or read it yet, you can do so. It's very, very cheap. I think you can get it for about £1 or something on Amazon through Audible or Kindle. So no real excuse. Have a look, enjoy, and I'll talk to you next week.